Good afternoon and welcome to my latest update with all things coronavirus and the economy, tax and keeping your business and livelihood in check. Okay, so massive night last night. We accountants that have a life stayed up all night looking at the legislation passed through the House of Reps and the Senate. I think it got passed about 10:30, 11:30 in Canberra, and so it went through. So it was quite interesting watching how that worked. It almost looked like a unilateral type of agreement. The Greens and Labor put up some amendments, mostly on trying to keep people who are attached to employers in a casual basis for less than 12 months included. Tried to keep the 457 people overseas in the scheme as well. That all got quashed. There was also some debate around about allowing employees to use their annual leave and then employers getting the subsidy at the same time. That all didn't make it through, so it is pretty much unchanged. Now, what I would say that is we don't have the exact information, although it's been legislated, right? So what do I mean by that? We'll go through legislation in a second, and I've actually, if you can, there might be some part of this that you'll see me talking and you'll want to listen to how I go through legislation, but if not, at the end, I'll go through some tools that I've invented recently to go through how it's going to sort of affect you and how, based upon what we know right now, how it may work in your businesses. And I've got a bit of an example there to show you. That said, so the political part of it is pretty much done and dusted. But what's going to have to happen now is that we need to sit down and wait for the most important part, in my opinion, is are businesses or employers, let's say, going to be eligible for it? And so the big thing there is we all know about turnover. We all know that the differences between 1 billion and more is 50% drop in turnover. Under 1 billion, it's going to be under 30% drop to be eligible for the job seeker. Now, Jobkeeper. The Jobkeeper is going to be very important in another regard too, because if you look at the PM's website, pm.gov.au, he's put out a code of mandatory conduct that suggests that commercial tenancies between landlords and tenants are going to be sort of governed through these job keepers. What I mean by that is that if you're a tenant and you can apply for JobKeeper, they're now going to be sort of mandated, let's call it more of a guideline, is as to employer tenants can ask for a reduction in rent from the landlords to an amount of money that they've reduced their the turnover by, and obviously it's got to be more than 30% to be eligible for JobKeeper. So that's going to be one of the stipulations to have these chats. So talking to a lot of landlord clients and we're getting those letters out to tenants at the moment. Now we'll talk more about that later. So what's happening is we've got some information about how this the legislation is going to work, and it's mostly a safeguard of employees. We're talking more today about employees and who's going to be in and not. And I think it's going to be very simple to work out whether an employee that is in your business is eligible for JobKeeper. So employees, full-time or part-timers, and for casuals who were unemployed on the 1st of March 2020. For casuals that had to have been have a continuous relationship with your work for at least 12 months from that point in time. So the first crack is, was the employee engaged or employed by you on the 1st of March 2020? If yes, go further. If not, you're out. If they are, then great, they're in, and so they're an eligible employee for the JobKeeper payment. Whether you are, as a business, eligible for it is a different story. And that's where the ATO is thrashing through these legislation. So when I say the political job is over, it's all done, dusted. The people have smiled for the cameras and done their big speeches in front of lecterns and stuff. But now what's going to happen is that the legislation, which I'll show you in a second, is going to show you that pretty much the Commissioner of Taxation and the Treasurer have all the power as to how to make these rules. And you can imagine the tax office is going to try their hardest to ensure that they're not giving out a lot of money. They do a lot of work to try to get money in their coffers, so that I can bet you bottom dollar that they're not going to make it very easy for us for businesses to be able to get this money out. So there's going to be a lot of integrity measures in there, and we don't know what that is. As far as I'm concerned, I said this in my last video, it looks like it's going to be a month to month or period to period in terms of quarterly if you're a quarterly lodger, or month to month if you're a monthly lodger for GST. And that's how you're going to work out the difference between your quarterly income or monthly income from 12 months prior to see whether you drop by 30%, whether they're eligible. Okay, there's going to be carve-outs for, I think there'll be some discussion about clients who it's very hard to measure their income drop because they might have just started or something happened or what have you. And is there going to be estimations and there will be some payback rules, drawback rules? There may just be. So watch this space. We'll keep you abreast of that. I know that everyone was hoping that we'd get some 100% clarification today. That is not the case. You would have thought that being that the legislation slipped through Parliament so easily yesterday, you would have thought they would have done some pre-work on the taxation side of things, but maybe it's just very hard for them to agree on how the mechanism is going to work, because you've got the political elements where the government wants as many people as possible to get this money, and you've got the ATO who are going, hey, there's going to be some people who are going to try to take advantage of this situation. So that's I guess what they're working on at the moment. Actually, what I'm going to show you first is this. Okay, so this is a lot of clients are very interested in this particular slide, because it basically gives you up to the minute information what the Treasury thinks that how this is going to work. So I'm not going to go through too much about who's eligible. The 30% thing, that's going to be totally smashed by probably tomorrow or hopefully by the time we get back from Easter about how we do that. What's important about this is it's got some questions. Look at this one. How do I work out which of my employees are eligible? We'll talk about that in a second, but more so, when I'll see the first payment, you won't get it till first week of May. Okay, so yes, you're going to have to pay in arrears, and every time you ask the Prime Minister the question, he's saying that, well, you've got to borrow some money and work it out. You're not going to pay you in advance, it's in arrears. Okay, so this one's important. What's the definition of turnover? Turnover will be defined according to the current calculation for GST purposes and is reported in the BAS. It includes all taxable supplies and GST-free supplies, not input tax supplies. So it's pretty much all your sales. There are some modifications that are part of a GST group. It's only Australia income. Okay. This is a good one too. I've got lumpy income. How can I self-assess my turnover has fallen by 30%? Well, the commissioner is going to have discretion. So these tests aren't out yet, so there's no point even worrying about them. At least the good thing about having the questions there is you know that the ATO is looking at it. Okay, so they know that these are going to be questions that discuss. So they'll be talking in a round table at the moment about it. Here we go. All right, so I'm self-employed. Am I eligible for the payment? Okay. Yes, people who are self-employed are eligible for the payment. So your sole traders, trusts, bits and pieces are all included. Okay. This is the hard thing. This is a very, I guess, contentious issue, because you have a lot of clients that have trusts where the husband and wives working the trust. It looks like to this, it's only going to allow us to get the JobKeeper for one of those beneficiaries. Okay. So, can each partner receive a payment? No, only one partner can be nominated. Okay, again, this is Treasury document. Okay, will it be changed? Who the hell knows? We don't know that until we get the information. This stuff was not covered in the legislation. Okay, this is just the mechanism. Okay, can trust receive a JobKeeper payment? Trust can receive a JobKeeper payment for any eligible employees. However, where beneficiary of a trust only receive distributions, which is a lot of you guys out there, rather than being paid a salary and wage for work done, one individual beneficiary can be nominated to receive the JobKeeper payment. Okay, one. I'm a company director and I'll get director fees. Yes, you're eligible. I'm paid as a shareholder. Yes, one shareholder can get it in terms of dividends. I receive rental income as a landlord, but not registered for business. Well, you can't. You're not in a business. You're just an investor. Okay, you've got to go get JobSeeker. So there'll be an online platform to work out how to get this. Okay, so that's very important. Okay, so this is the explanatory memorandum. So a little bit more in depth than the actual legislation, which is all sections and legalese. So this is pretty cool because it gives us a bit more insight into the provisions and how they work. So this is what they would have looked at last night in Parliament. So let's have a look at how it works. I've identified some areas here that I just wanted to run through with you. Now, what I'm trying to do here is show you that cut through the noise. This is the information that is out there. So all the stuff you hear on TV and in the newspapers and opinions and industry, they're all discussing this particular legislation that was passed yesterday. So there's no smoke and mirrors. This is it. This is as good as it gets regarding that, right? So I wanted to show you this because it's important to understand, because later on when I show you my my tools that I've prepared, it'll try to let you understand how this works, right? So I'm just trying to get rid of all that noise and go, okay, this is what we have. We don't have the whole mechanism of how it's going to work regarding the eligibility of it, but we do know now what the legislation is, and this is what it is, and this is what was passed, okay? So now we've got to also look at issues regarding the fact that, you know, this is costing us a lot of money, but this is a medical crisis, right? So you got to remember that this whole crisis is costing us money. This is $130 odd billion worth of stimulus just in this one method here. And you can imagine the government has done their own modelling based upon what would have happened if we just let the pandemic run rampant and people got sick, people couldn't work, hospitals were inundated, not enough ventilators for people with the disease and so forth. We're not out of the woods at all. So that's why it's important to keep doing what we're doing a little bit. So yes, it's expensive, but again, the numbers are there. Is that, would you rather spend $130 billion on an economy that's been smashed because of the coronavirus and hospitals that are not working well, that are overflowing, businesses that are suffering, employees not being able to work because of sickness, customers not wanting to buy because they're sick, as opposed to putting a quarantine or a holding pattern on the world as we live at the moment, and that's going to cost. So at the end of the day, if something's going to cost pretty much the same by doing nothing or suffering the consequences of going and actively engaging in society and getting sick, well, the fact that we can save innocent human beings and our family and friends and our livelihoods is much more money better spent in the eyes of all of us, I believe, my opinion, but that's the way it is. Now, throughout this whole terminology that we're going to go forth, you're going to hear this terminology called the Jobkeeper Enabling Directions. So remembering, you've got two things here. First of all, as an employer, you have to be able to prove that you're eligible for JobKeeper subsidy. Now that is going to be basically, in your cases, relying upon your turnover reducing, in most cases by 30%. People over $1 billion, that's over 50%. Okay, so that's going to be very important. Now, these provisions are not really discussing that right here. This is discussing more so the Amendments to the Fair Work Act, which means what's changed. So this is, if you have an employee, so you've already passed the test as being an eligible employer for work, for JobKeeper. Now you've identified certain employees of your business that are also eligible for JobKeeper. Therefore, there's a match, and therefore what you can do then is, as a business, you can make and issue JobKeeper enabling decisions and directions. What does that mean? Well, typically, if you have a look here, increased flexibility around employees' hours of work with a stand-down direction, performance of duties and location of work. So it enables employers and employees to make agreements for increased flexibility around annual leave entitlements and days and times of work. So in essence, you've got three things there. So a JobKeeper direction. I don't have any work for you. Sorry, but we want to keep a connection with you, but there's no hours. You can, we will apply for JobKeeper and pay it to you. So no work. Okay, so stand down. Listen, we've got enough work for a few days a week. How about we give you those days and the rest you can stay home? Or how about we work on your holidays and do some sort of a bit of both? Also, how about to the fact that we can't give you work in the office anymore, we let you work from home, And how about we allow you to work different types of hours? You might want to work at night. You might want to work on Sundays and Saturdays, or that's what the directive is, rather than during the week, or vice versa. You used to work on Saturdays and Sundays. Now you can't, so you can work vice versa. Okay, so that's what this is. Okay, so therefore there's the announcement. 30th of March is when it was announced, and that's when it starts. Okay, so don't forget what I said before. It's all about the 1st of March 2020 is the date that the employee had to work for you to be able to be an attached employee for you for JobKeeper. But 30 March is when the payments actually are allowed to be paid under the JobKeeper mechanism, and as you know, will be refunded back to you as a subsidy in the first week of May. Okay, so what else have I highlighted here of interest before we get into the important part? Okay, so 12th of March was announced originally, $130 billion. I know it gets us worried, but like I said before, it's a countermeasure to safety net. And the fact if we didn't spend that, we would have been in heaps more trouble potentially. Okay. All right. So here's a summary of new law. Okay. So, like I said, you can issue JobKeeper enabling directions, provided both the employer and employee are eligible to do that. So therefore, you've got the hours of work, stand down direction, as I said before, and minimum leave. So the idea here is that you must at least provide the value of the JobKeeper payment to the employee. And if they are working for you still and the amount is greater than the JobKeeper subsidy, then you have to pay that. So if someone's on $1,200 a fortnight, you're receiving $1,500 from the subsidy, well, you top them up to $300 extra a fortnight to cover that. Okay. Okay, so JobKeeper enabling stand down direction employees, so we can ask the employee to reduce their hours of work. Ask the employee about duties performed by employee, and also have a direction about the employee's work. So they're the three main ones. So it also discusses and authorises an employee to qualify as a JobKeeper scheme and employment to make agreements in relation to days of times of work and taking paid annual leave, including in half pay. Okay, so remembering they're your JobKeeper enabling directions. Okay, so again here talking about minimum payment guarantee, you have to pay the amount of money that the JobKeeper amount is. Okay, so this is very important. Okay, so a JobKeeper enabling stand down direction cannot reduce an employee's hourly base rate of pay. So ensure that where an employee is given a JobKeeper enabling stand down direction, employee's base rate of pay worked out on an hourly basis, not less than the base rate of a pay worked out on an hourly basis that would have been given if that employment direction hadn't been in play. So that basically means that that if you basically say, hey, well, I'm going to pay you $1,500 a week, fortnight. Well, okay. Well, let's have a look at that. Well, I'll get you to work 38 hours a week or 76 hours a period for $1,500 and work backwards upon your hourly rate. You can't do that. So if somebody was on a higher rate and you only want to pay them up to the amount of money you're getting subsidised from the government, then you have to work out how many hours, not how much pay rate, that you can ask them to work for you. Okay. I've got an example of how that works. Okay. Very important, and that's something that I guess isn't there for the Fair Work Act. So you can authorise your employee to have a stand down to work fewer days or hours. So an employee cannot be usefully employed by the employee's normal working days during the JobKeeper enabling stand down period. So you can say that now. So it's, this is where the whole world's changed, because before it'd be very difficult for you to say, hey, listen, I'm not at work this week, go home. Well, I'm on annual leave. I mean, I'm on a fixed contract, and you need my notice period. Also, this stuff changes a lot of that, right? So you can give them other tasks, right? That within their skill ambit to do. So if, for instance, you weren't allowed to, you had a business that potentially had a warehouse and office and clerical, and and the office, you've closed the office down, or if that person has still got skills of warehouse skills, and you can get them to work hours doing things in the warehouse that's still operating, moving goods, cleaning, all that sort of stuff, well, potentially that's stuff that you can say, hey, I know that's not in your job description, but this stuff is, can you go and do it? Okay, and they reasonably shouldn't be able to say no, right? And then there's also, dispute resolution mechanisms is there as well. So again, as this part here says, again, remembering to be able to give an enabling direction, it can only be if you're both in the JobKeeper, so the employer employee. So if someone that is as a casual and you said, listen, because of the whole coronavirus, I need you to do X or Y, or I need you to change this. Well, you can't give that direction because they're not part of JobKeeper. You can get them to agree to work different days. So you might say, listen, I want you to work weekends now, or you were working weekends, I want you to work during the week, or so forth. You can almost now say, well, you can say, I want you to take some annual leave, including half pay. There's probably some examples coming up as well. Okay, so it may, like I was saying before, enable require the employee not to work on a particular day, or work for a lesser period or fewer hours than the employee would normally work. The employee cannot be usefully employed in their own normal days of hours during the JobKeeper enabling stand down period because the change has been attributed to the coronavirus. Okay, has to be safe if you're getting to do that. Obviously, less patronage. You can say, "Oh, well, listen, our restaurant's closed. There's no work." So that's definitely something. Have a look at these examples. All right. So the first one here is a waiter of a restaurant. Basically, stand down. You can't work. There's no work for you at all. So they're basically, rather than telling them to go down to Centrelink, now they're saying, listen, we're going to be on JobKeeper. You can be a JobKeeper. So what we'll do is we'll just pay you the JobKeeper amount, which is $1,500 a fortnight. This particular business has been closed for 4 weeks. Okay, so this Anna was probably earning more than $1,500 a fortnight, but at least they're getting $1,500 a fortnight. Probably better than going to Centrelink and getting JobSeeker. And remember, JobSeeker has an asset as an income test, which means if Joe's partner has a higher income, she might not be worth getting that money. She won't be able to get it. Okay, this one here, Rachel works administrator for manufacturing business. So there's a 30% reduction, so they qualify. Rachel's employer qualifies as the scheme and gives JobKeeper enabling stand down under that to say, hey, Rachel, I've only got 32 hours worth of work for you. She's on $30 an hour. You can't change that hourly rate. Okay, so then what's happened in this case? She used to get $2,280, which is 30 hours times 76, $30 times 76 hours. Now she's only working 64 hours, but at $30 an hour as well. She can't change that. So she's going to get paid $19.20. You can't say, listen, because of I still really need you for 32 hours, but I'm only getting $1,500 from the government a fortnight, so that's all I'm paying you, which it means that what changes, the only variable there is the hourly rate. You can't do that, right? So it's only the hours that got to be changed. So that's that. Okay. All right. Again, you've got to be licensed to perform the duties. If you're told that I need you to do something else, I think there's a thing here about driving a forklift. You can't say, hey, by the way, the forklift guy is sick. Can you go and move things out with the forklift? Well, if you don't have a license, or it's not safe, or whatever, or social distancing issues, then you can't do it. Okay. There's also discussion here. I think this is where we talk about place at home. So you can tell people, hey, I need you to work from home. And there's information about how that operates. You need to give, where is it? Okay, yeah, so you still can tell employees hey, I need you to work different days, different hours, because it has to fit in with the new system. And taking annual leave. Okay, so this is very important. Get a lot of questions about this. Employers can request to take paid annual leave and agreed to take annual leave at half pay. So you can still do that. So you can actually tell them to take, so you can double the annual pay. So it actually goes for a couple more weeks, but you're getting half pay, which may in most cases be more than what they were getting a week anyway. All right, so again, there's some stuff built into this situation regarding the requests and about refusing things. You know, there's a lot of you know, the Fair Work Commission can come into there and discuss it if you're having issues about someone saying, well, I don't want to do that, or I want to come into work or whatever. There's, you know, there's going to be things there. Now, I guess worst case, and the way I read it, is that you can just say, well, I'm not going to register you as as a eligible JobKeeper payment. So go down to JobSeeker and, you know, and listen, I'll standing you down. If there is any work down the track, we'll consider you. So there's all your risks. Okay, so you got to give the employee at least 3 days for intention to use one of these provisions. The service period still counts. So if someone's getting paid JobKeeper, remember JobKeeper is just a subsidy for the employer. So it's get passed through the employee. So in essence, their accruals of holidays and annual leave and all that stuff still accrues. Okay. There's not much in that area that I really want to discuss at this stage. And I think that's pretty much it. I think there's some stuff here. It's interesting to see that this explanatory memorandum here as well doesn't talk about 6 months. It talks about pretty much, what's that, 10 months, you know. So the payments from the commissioner are going to be up till December. But again, I think this allows him to do it. So they might be thinking that this could have to be extended out. Again, telling you made by the commissioner from date of commencement. Okay, so this is where it gets a bit scary in terms of there's not enough information about how that's going to work, how you apply. It talks a lot about getting into trouble if you do the wrong thing, but you know, the rules are made by the treasurer and the commissioner is going to pay it. So those two are very important in this situation. Highlighted some areas here again, treasurer, commissioner. So what these two guys have the ability, well, what the treasurer does and the commission basically works for him. They will work out eligibility, how an application for payment may or must be made, was it paid installments, lump sum, notices, obligations, rights, method of payment. Typically, the method of payment is going to be paid to your bank account. But the commissioner, if he can't find your bank account or something happens, he can actually potentially credit your integrated client account. Again, don't forget integrated client account, you can ask for refunds, but then again, you might have debts and trying to get money out of integrated client account is going to be crazy. So obviously we're going to be in our biggest, I guess, painstakingly telling you to make sure that your bank accounts can be linked into this when we get it. Now we think it's going to go through single touch payroll. So, you know, hopefully we'll have more information. Xero's already come up with a package at the moment. So we'll go through that and probably give you some information on that for the Xero clients. Overpayment, a lot of talk about interest and they can remit it and stuff. And so that makes it look like, you know, if you're getting overpaid, then is that because you're allowed to estimate it? Or is it because you're doing something in fraud and they found out, so you've been overpaid? There's a lot of things here. I don't even know. I don't even bother going to the into these assessments. But basically, the imprisonment 12 months got me worried. The imprisonment for 10 years got me very worried. So obviously, if you're starting to do things that are falsifying your eligibility, then yeah, they're gonna have. Well, they've got the tools now to get you. Whether that happens or not, who knows? Time will tell. Yeah, schemes. So there's a lot of talk about this stuff, right? So obviously, like I said, you're not going to hear this from the politicians because the politicians are about calming people down, making sure people got food on the table, and guess being politicians, okay, and not getting berated by not doing or lack of doing something. But now, end of the day, is the people, the police and the ATO, I guess, is the police in this matter, is starting to work out, okay, what are we going to do to make sure that this money really goes to people who really need it, and not people who are just trying to get it because they're trying to, I guess, profit from this whole situation. And unfortunately, that stuff will happen. And you know, as accountants, you know, we have professional obligations and that we have to abide by. It's not something that we ethically have to just abide by. We've got professional statements and guidelines, and as tax agents, we've already got a plethora of information sent to us about, hey, especially when the boost payments came out, where people were trying to do schemes there to register themselves and backdate themselves PAYG. We're getting a hell of a lot of information there every other day, if not every day, talking about the application of the integrity measures. So very, as I said, that's the legislation, the memorandum. As I said, not a lot in there in terms of how it's going to work for you to be eligible. A lot of information there now regarding what you can do, what you can't do. So I just thought that based upon that, and the reason why I wanted to do that first was to show you a few more tools that I've done. Now, I'm pretty confident that you've seen a lot of these ones that I've already done. Now I'll show you this one here for a second. So what we have here is our Jobkeeper calculation sheet. So this is very simple, and this gives us a quick scenario of whether you can get the job seeker or Jobkeeper payment and what roughly it's going to cost you. So again, this one here, I'm just not worrying about this part here, the eligibility. That's going to come in my next video, hopefully tomorrow. I'm not going to do something on Easter, I'm sorry. It's not on Easter Sunday, hopefully Saturday. But we'll work out whether you're eligible. Okay, so we're going to just assume this business here has dropped by 50%. So what I'm going to do here is I'm going to go with a scenario of, I don't know, let's say 6 employees, right? And I'm going to say these employees start on the 30th of March of 18. Okay, so I'm going to just copy them down. Okay, so they all started in that period. Okay, now I'm going to say that these are all full-timers. So as you can see, as long as this calculator works out that the date was after that, it's going to say yes, right? So for example, if I was to put the 2nd of March 20 for employee 7 at full time, it's still going to show me no. If I was to do the 1st of March 2020, it will go yes. Okay, so and if, for example, you might have a casual who started on the 12th of December of 19, and let's just say he's full time. Yes, let's just turn that to casual, not eligible. Okay, so what I'm doing here is I'm putting that down, and I'm going to say that these employees get $3,580.12 a fortnight. Okay, so what it's quickly showing me is that, provided I don't change their hours, these employees here that are eligible have actually cost my business $2,080 after my subsidy. They used to cost me $3,580. Now, if I obviously, the reason why I get this is because my turnover is reduced. So this is the question that we have to know. Well, am I keeping employees on just to keep them working, or is there something else we can do? And so that's just the calculator. So what I want to show you now is the next one that I've built, and this one hopefully will make a bit more sense to you. Okay, so this is the new one that I just set up today. So based upon the provisions, what we're going to do is do the same sort of thing here. So I've got 5 employees in this case. Okay, and what I've done on this particular scenario is worked on them being almost exactly the same. So when they were first hired, so these 5 employees were hired on the same exact day. They were all hired full-time. And as I said, provided that we are a business eligible for Jobkeeper, then these ones here would be eligible because they were employed on the 1st of March 2020 and they were full-time. They're eligible. Simple as that. No other thing you really need to know, other than, you know, whether they're Australians and on a visa, that sort of stuff. Let's just assume that they're all typical Aussie employees who have started work at that point. They all start on the same day. All right, so they're all eligible. We're happy with that. Now, something that you need to know is that why are annual leave hours important? The reason is that these provisions are saying if you're paying someone annual leave and receiving the JobKeeper subsidy for that time on annual leave, they can't work through that and have less than 2 weeks annual leave at the end of that period. So if someone had 4 weeks worth of annual leave and you put them on JobKeeper, then you wouldn't be able to pay them annual leave for certain periods and get JobKeeper subsidy back from the government if they only had 2 weeks of holidays. And we'll go through that and hopefully make a bit more sense. So let's just look at this top person. They had 152 hours worth of annual leave prior to this week. Now, I should tell you, this is just a fortnight. Okay, this is all I want to know about is a fortnight. This is just, let's say, the current fortnight we're in now. So at the start of the current fortnight, 152 hours, 4 weeks. Every fortnight, these guys are full-time. They work 76 hours for us. And I've worked on an $85,000 ex-super payroll. So that works out to be $43.02 an hour, and that's their gross. Obviously, you've got to pay them 9.5% super on top. I'm not looking at any salary sacrifice or anything like that here. This is just hourly rate plus super. So the total remuneration for that employee every fortnight is $3,580.12. Okay, simple. That was what happening quite nicely before the coronavirus situation hit. Now, because we're assuming that the business now is eligible for JobKeeper, and the employee, by I just showed you, is eligible for JobKeeper, we're going to make a JobKeeper enabling direction. Our business has gone down by 30%. So what we're doing in this particular case, we're telling this first employee, number one, that we only want you to work in a fortnight, 6-day fortnight. So we only want you to work 3 days a week. So what happens then is this particular employee, through the direction, works physically at the business for 45.6 hours. This particular employee says, well, listen, I don't want to lose my 152 hours of annual leave. I want to keep them saved and banked up. So I don't want to go on leave. Happy to take the direction to work less hours, and I'm happy to live on a little bit less money, but I've got a holiday that I'll hopefully be able to go and, whenever we're allowed to get out of this country again, and I want to save up my holidays. Okay, so I'm going to sort of see how I go. All right. Okay. So what happens is that this employee now earns. Remember, they've got to earn the same rate. Okay. So $43.02 at 45 hours gives us a gross income of $1,961 pre-super, plus super at 9.5. This employee's fortnightly remuneration package is $2,148.07. His annual leave balance after that fortnightly period has unchanged. Yes, there's going to be some of those there's people out there who are very pedantic, probably has picked up a couple of extra hours because of the weeks that the time he was working, but let's just leave that out for a second. Okay, so subsidy. That employee now is eligible for the subsidy. So we, as an employer, get the subsidy, not the employee. The employee is picked up gross, 2,148.07, including super. So the employee difference is this. So that fortnight, this is all before tax, and this includes super, has received $1,432.05 less than what they would have earned the prior 2 weeks. However, they've worked 30.4 less hours as well. Okay? I hope that makes sense. Now let's look at the employer. So the employer, the prior time, was paying $3,580.12 for this employee. Now, because they've gone from $3,580 to now only paying them $2,148, less the $1,500 from the government, it's actually saved the employer $2,932.05. It actually costs, so if you deduct what it costs before and less what the difference is, it's actually cost the employer for that fortnight, out of pocket, $648.07 to have that employee. Now, remembering that employee worked 45.6 hours. So if you divide 45, what you actually paid them gross, including super, divided by 45.6, it actually cost you $12.98 for the hours that they were there. Now, remembering though, you've got to factor this in as well, which is very important for us accountants too, is that they haven't been physically there for 30.4 hours as well. So you just can't have, say, oh, only cost me $12.98. Yes, of the hours that they were there for with you. So 30.4 hours is a reduction in your productivity. So that person wasn't there to do the work. But on the flip side, you've reduced your work by 30% at least to get the JobKeeper. So therefore, there probably wasn't any work for them to do anyway. So what happens is hopefully your net bottom line is getting not, so just because you're losing 30% top, you're not losing 30% at the bottom line of your P&L because of the fact that you're getting subsidies for the wages, okay? Hopefully that makes sense. Now, let's look at employee number 2. Okay, so employee number 2, let's go set start the same day, same annual leave, works the same amount of hours before this whole corona thing. We're making a JobKeeper enabling direction, the same one as employee 1. Work 3 days a week for us, please. Now, the difference between this employee is that they really need they want as much money as they possibly can. So what they want to do is they want to top up the days that they're getting a direction through the annual leave. Okay? So therefore, that employee, because they're not asked to work 30.4 hours, they're saying, take that out of my, my accrued annual leave. And because the accrued annual leave was enough to enable, after this period, to have still 2 weeks of annual leave accrued, that's not a problem. So let's go back. What's the employee earn? Exactly the same amount of money as he or she did there as what they were pre-corona. No cash flow difference. What's happened though is the annual leave balance has been reduced from 152 to 121. Now, the employer has received a subsidy of $1,500 for this person. The employee, as you can see here, has had no difference. No difference in gross income that's come into the household. However, they have worked at least 30 hours less that week. So about 30 hours more at home or whatever. Okay? What's happened to the employer? Well, the employer still paid the employee the same amount of money that paid him before the coronavirus because topped up the annual leave. But in essence, because they received the $1,500 employer difference, that's where they're making their gain. So they actually only cost them whatever they're normally paying them, but actually cost them $2,080 because they've got the $1,500. So as you can see, in essence, this is what Labor didn't want to happen. You're actually bleeding this employee's annual leave, and it's not really costing you the same amount of money. Okay, so there's the situation for that one there. Okay, next one. Okay, a third employee to have started the same day. Okay, now unfortunately, this employee was potentially not as favoured as the other two before them, and the employer, so on the same money again, has asked this person to stand down and basically said, we don't have any hours for you. We just can't, there's nothing to do, okay? So what happens there? Then this particular employee goes, well, I still need money. And remembering you can do holiday half pay and all that sort of stuff. But in this case, I'm just saying, let's just bleed it out as much as we can. So this person goes on annual leave. And you could just you could actually swap and change this between different people if you wanted to. So you take a week off and then you take a week off and whatever. But anyway, this particular person here says, I want my annual leave. You pay them annual leave at your same rate, obviously. So what happens now? So that employee, again, in this particular 2-week period, fortnight, receives the exact same amount of money. Okay, so they've received $3,580, which is 100% annual leave and that was what it was before the stand down order. But the employer here has $1,500 of subsidy against that amount. So again, has been able to utilise the JobKeeper subsidy to help reduce his entitlement. Now this is where it's a little bit weird, because had you told this person that I'm dismissing you, I don't need you anymore, then you would never, you'd have to pay that $3,580 to that employee, gross, and termination, okay, pay them out. However, what you're doing here is actually utilising this, the way the legislation is written, whether you agree or not, to actually reduce your, I guess, balance sheet entitlements. So the government's contributing. So really, it's only cost you $2,080 to pay out $3,580 worth of entitlement. Okay, all right. That's a bit contentious, but that's the way I read it. Okay, so employee number 4. Okay, same thing. This particular employee was, again, unfortunate enough to be told to stay home. However, look at this, only 2 weeks worth of annual leave. If we want to put this person on JobKeeper, we can't let them take their annual leave. So we tell this employee, listen, we're going to stand you down, put you on JobKeeper, but you can't take your holidays. Or you can, we just don't put you on JobKeeper. So it's a choice, I guess, right? So what happens in this case is that there's no work hours, there's no annual leave. So there's no money in those areas there on your pay slip. So what you do then is you pay this person what's called a JobKeeper payment. Now, JobKeeper payment, because they're not working for you, it's not wages in essence, it's a JobKeeper payment. So therefore, their gross is $1,500 before tax. There's no superannuation on just the JobKeeper payment. If there's no wage element of that actually them working for you or annual leave, then all it is JobKeeper. There's no super. So what happens here is that you literally pay the employee. So the employee gets $1,500, whereas before he was getting $3,000. So he's down $2,000. He hasn't worked for 76 hours, so that's okay. At least he's getting $1,500 for not working at all. The employer difference is the fact that you haven't paid this guy at all. So the employee's still got some money in his life, but you've basically saved the whole payment between what you're paying him then before the coronavirus. Okay, so that's a typical JobKeeper payment for an employer. I guess that is, I don't know, let's say a gym, a coffee or a restaurant that's fully closed. That's typically what would happen. Is that you don't need them. You don't need to work and they don't have any annual leave, let's say, or whatever, and you just basically you're doing throwing, catching and throwing the ball. Let's say the JobKeeper payment comes in. Well, you got to pay him first. Like I said, it's arrears, and then you're getting reimbursed. So it's a in your case, it's a neutral position. Last but not least, this last person here. Now, this is what you're probably starting to think about already. That's why I put it in. So this one here was on the same rate and was getting $3,580 like everyone else. We've said to this person, your JobKeeper enabling direction, if you want to agree to it, and they've got to basically they don't have to agree to it, but they need to basically come up with reasons why they shouldn't, like safety and bits and pieces. It takes me too far to drive. If you want me to go there, whatever it might be. Okay. But what we do here is we reverse engineer this. So we say to this person, listen, we're going to get $1,500 from the JobKeeper because of you, right? So happy to pass it on to you. However, based upon your hourly rate, $43.02, if I divide $1,500 by 43.02, it works out to be 34 hours and 87 in the 76-hour period. So you say, listen, I'm happy to pay you to come to work for 34 hours in a 2-week period, and I'll pay you your $1,500. Okay? Now, because you're actually paying them money, that's not a JobKeeper payment, it's actually salary, and therefore it's still subject to super. So what happens here? Let's have a look. This employee was getting $3,580. Now is getting $1,500 plus super. So he's gone down, or she's gone down by $1,936.62. However, hasn't had to work for 41 hours. The employer has actually only cost this employer $142.50 over a 2-week period to have that employee working for 34 hours, which means that the effective hourly rate in this example is $3.73. Of course, this person can take some annual leave if they had some. And if you can see in this case, I was quite clever to not have any annual leave, so I don't have to worry about that calculation for you. But we can all put that in. So in essence, these are the provisions that we're working with at the moment. Okay, so I'll just stop that for a second. All right, so as you can see, there's no indication of how we're going to, at this stage, have a definitive answer on the eligibility for the JobKeeper payments. Okay, they are something that's going to be very well policed, and so the idea is we need to look at your eligibility. That's all we're going to be talking about for the next few weeks. I think we're going to understand now how these provisions are put in place, what employees are eligible, what you can do, how many hours, and that's going to be a discussion with your advisor. Hopefully that's us, and you about, okay, what's that point where we're sort of break even point, and you know, with the reduction, how much can we reduce our turnover by, which is not what we want to do, but if our turnover reduces by that much, how much could we have to prop it up with employees? Now, obviously, it's not a cookie cutter approach, because different businesses have different employee contribution to sales. As an accounting firm, very high contribution to sales. When you're a manufacturer, potentially lower. So there's going to be tools that we'll have there for you to help you work that out. But as you can see from these ideas, we're on the forefront of that, working out how to work. And this is totally not doing anything dodgy, in my opinion. This is utilizing what the government is trying to make you do. It's trying to make you think about keeping these people attached to you. Because remembering the other thing is too, is that if your employee doesn't want to play ball with you, this is again my opinion, right? Then they don't have to be part of the JobKeeper, and you can just send them down to Job Seeker, and they can get their $1,100 a fortnight potentially, and that's fine. The idea is that if everyone else is playing the game and sharing the load or whatever and working on it together, then maybe when everything gets back to normal, you'll probably favour the people who've been attached to your business. It works both ways, right? I'm not trying to be on the employer's side here or the employee's side. I'm just trying to say this is what it is, and what I've prepared there for you is not some sort of tool that's going to make sure that the employees are getting getting the brunt of all the problems here. Absolutely not. The employers are the ones who have the obligations to pay rent, electricity, taxes, and commitments. All right, and also have a liability to their customers to ensure that they're fulfilling their contracts. Massive amount of risk. Hence why the government has watered down the Bankruptcy or Corporations Act provisions. So you got to remember that these aren't things that we're doing to take the mickey out of people. Something that we're going to do to ensure that our businesses do survive this hibernation, or I call it sort of part-time work methodology at the moment. So that's what we're looking at. Okay, so so today we went through the legislation, the information memorandum, and we've gone through how it sort of works. We've gone through eligibility in terms of employees. We've had a look at how we believe it should work in a typical scenario. There's going to be swings and roundabouts on how it works for other people. The next thing we'll be waiting for, and I keep refreshing the screen all the time, is the ATO to come out with the Commissioner, how they're going to police and also work out your turnover test and how you're going to make that 30% reduction. So we need to look at that, and I'll be straight back onto the video as soon as I find out some more. So all in all, remember that this is a medical crisis that's turned into an economic crisis. So at the end of the day, the politicians have done their part. It's up to us to do our part. There's no point rushing back, feeling that everything's back hunky-dory again, and rushing and opening up the doors and doing something silly. That's all to backfire. We need to ensure that we're self-isolating, that we're fulfilling our part of the deal and allowing everything else to fall in place. I don't know what the official stance is, but I do not doubt that accountants out there and my fellow accountants are working in essential services at the moment, triaging clients, giving them hope, coming up with ideas like this. We really want to show you ways that you can help keep your staff on, keep your team together, keep your business afloat. Please contact us, get in touch with us, ask us for tools. We'll put some modelling in for you, but please look out for your neighbours. If you do find someone at a water cooler, or I know we can't even go near one anymore, but somehow on the phone, smoke screens or whatever you might be doing to communicate, if they're doing it tough, get them to talk to us, get them to talk to somebody. There's an amazing amount of goodwill out there. As I say to people, this is not the time to keep things to yourself. Share as much as you can, okay? I wish you all a happy and holy Easter. I know that this is going to be an Easter devoid of the beach, devoid of the camping grounds, devoid of sport. It's going to be very, very different, but it can be a good different. You know, if we can just do our little bit and, you know, be together as a family, call a friend, call a family member you haven't spoken to for a long time, do an act of charity, make some donations of that money that you might have saved up to go to an Easter holiday, put it to work somewhere else. Reach out, do some reading, think about your businesses, get your cash flow organized, watch a movie. Make sure that you empower yourself and get you back that energy you need. Remember how you felt running up to Christmas last year, how busy and tired you were, and you just could not wait for Christmas break. Okay, take that mentality into the next couple of days and use it to your advantage. To your advantage for yourself and for your fellow neighbour, that we can be stronger, more empowered, more energetic to go on and fight this and have the best business that we could possibly have. Can I just wish you the best Easter and all the best with your business, and I'll talk to you very, very soon. Thank you very much.